Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's been quite a week. Not only do we get the Greek situations finally settled with today's German parliament signing the okay to go forward with that, also we have the Iran nuclear deal signed. So those worries are behind us for the moment, but there's other things coming on along the way, and that's going to be, of course, the interest rate hike in the U.S. But first, let's look at some stocks that we thought were doing very well and have done very well. First of all, this is Google, symbol G-O-O-G, if you don't know this already. Look at where we had a signal right here at 543.74. This is so similar to the Celgene signal, and it happened in just a matter of days. And look at, we're up today 12.81%, which is pretty amazing. Yesterday we were up almost 4%. So again, this is all to do with the trade triangles and how they catch these moves. Pay attention to them. They're very powerful. This is Celgene. Remember Celgene? There it is. 1, 2, 3, 4, 5 days ago, and it's had a huge move. Hit our target around 136, and very happy with that. Plus 90, still wants to go higher probably. Let's take a look at the Dow. It's having problems right around the 18.2 level, which we expected. It's over the 50 line, which is a good thing, and it looks as though it wants to try to do better. It may have to consolidate right around these levels. Again, you have the monthly and the weekly trade triangles negative, which is of course causing this to slow down right here. On the NASDAQ, you've actually in new ground. You had a buy signal today. All of the trade triangles are plus, and this is a very strong signal that this wants to go higher. I would say you've got probably right now another 200 points on the upside in the NASDAQ. So let's see how that plays out. But again, this is the strongest out of all of the currencies, and of course a lot has to do with some of the major stocks in that index. The S&P 500, very, very similar to the Dow. You see where it's actually running up against a brick wall, which is pretty much where we thought it would be, the 2130 level, 2130 right here. You can see it needs to close over that level, get over that level to really turn these triangles around again. So that's what we have to look for. Again, it's a trading range, 65, and it's over the 50 line, which is a good signal, but it looks like it wants to maybe regroup here for a while and then maybe make a strong move next week. So let's see how that plays out. Gold looks bad. So all I can say, if we close down here, if we close the 141 level, something like that, it'll be a new 52-week low, and chances are it's going to be lower next week. It's very oversold, but not to say it can't be oversold even further like we were back here in the March period. So again, this does not look good. We need to see, this is going to turn around. It needs to turn around really quickly. Otherwise, it's going to just slowly evaporate. Sort of like holding an ice cube in the middle of the desert. It's going to just melt away. Pretty much the same thing with the euro. It's really not going anywhere, but all the signals point to lower. Minus 90 on the trade triangles. You've got lows here. This is the last thing sort of holding up. The lowest close we had here was 108.78, and we're 108.88. So it's very close to making a new low close, but not a 52-week low close. Crude oil is just bingo, went through the double bottom we talked about. We thought it was a very weak one anyway, and it's going to set up to challenge the lows that we see here around the 49.50 area, and I think that's going to be in the cards or probably early next week if nothing else changes. It looks like the trend is clearly down with a minus 100. Now, this is an important weekend because of all the things that the market's looking pretty good. So you want to take a look at our smart scan and look for 52-week highs. I'm going to show you very quickly how to do that. Here's the smart scan page. You want to choose 52-week highs. It's 412 right now. Click on that and you can see all the 412 here. A lot of stuff to go through. So what we want to do is filter real fast. So let's say that the price is greater than $20. That'll eliminate some of the very cheap stocks. Then we want to see average volume over 2 million. And we'll just do U.S. exchanges. You can do Canadian and Australian exchanges if you're located in those countries. But we'll just use U.S. exchanges and we'll say scan. Now this 412 will go down dramatically. 7. That's much easier to look at. And look at these stocks you can look at. Nordic American Tankers, new highs, looks very good. Barclays, Scorpio Tankers, you can put these in and look at them. American Eagle, again, the idea is they've got to close very close to their highs to be eligible for a 52-week high close. You would exit the position on Tuesday on the opening. If it opens sharply lower on Monday, you would exit the position immediately. So that's how it works, and I think it's a very good way to trade. It's been around for a long time. It's taught to me over 30 years ago, and it still works today. So, hey, I'm Adam Houston. Have a great weekend. I will be back on Monday, and happy trading.